Hey folks, good afternoon. It's Dr. Jack Camardo once again. This is being recorded Monday afternoon, just after 5 on September 27th. And I got a couple of important areas I want to go over with you. The first is the now pending tax legislation winding its way through the House of Representatives and headed toward the Senate in reconciliation and so forth. And this is the summary is prepared by the team. My friend Michael Kitces, a renowned thought leader in the financial planning space. And I'm not going to dwell on all the points, only those that I think will be of interest and use to you. But this is the summary of the text of the proposed House of Representatives bill that was released by the House Ways and Means Committee on September 13th, a couple of weeks ago. And obviously this is not final form. There's still a lot of horse trading and wrestling to be done. But many of the concepts, I think, are almost certain to stick in one form or another. So increasing the top marginal rate from 37% to about 40%. And that's before the net investment tax and net investment income tax, and also Social Security and FICA tax and so forth, and state tax rates. So actually, total income tax rates could be significantly higher than 40%. The top capital gains rate being increased from 20 to 25%, and then again, that's before the net investment income tax, which could juice it to, 28%, something like that. And this is now proposed to be effective September 13th, a couple of weeks ago, unless there was a prior binding contract to sell, which would probably be a tough sell to IRS if there was. So that's pretty notable for our investors. Taxes on businesses, particularly of truncation of the qualified business income deduction. You'll be paying more, many of you business owners. And Roth conversions are going to become a little bit more restrictive. It actually will prohibit all Roth conversions about 10 years out. So if make hay while the sun is shining, and all Roth conversions of after-tax funds, and this will affect participants in 401ks that have a Roth feature, will be prohibited after January 1st of next year. So that's something that if this applies to you, you might want to shovel as much money into your Roth 401k now as you can. I'm going to pass on that, but I do want to get to estate planning. That's, going to make things. All right, so this is really the big news for most of you, and probably the most urgent if your net worth is a couple $1 million or so, which we've really been preaching, for a year and a half now. And I think this is going to stick. So they're looking to reduce the current estate tax exemption by half, dropping it from about $11.7 million per person to $5.8 million per person. And that was existing law, which was booked to sunset at the end of 2025. They're talking about something this year. This is important, which means that a couple can now only get out about $11.7 million, which is still significant headroom. But if you are, again, that's what you're worth at death, not now. And that's, hopefully, with our advice and a tailwind, you'll get well beyond that, by the time the last spouse is gone. And that's if they don't further reduce the exemption in future years, which I very much expect. So this is now getting urgent if your net worth is more than a few $1 million and you care about avoiding estate tax. It's really important to begin the planning process now and setting up, we call it FBOT, Family Bank Ongoing Trust. It's a type of grantor trust called, based on the more generic term called SLAT, or Spousal Lifetime Access Trust. And it's really important because those are going away. The exemption is coming down, and the ability to make gifts in a tax-free and estate tax-free manner and still have similar income tax treatment, which is really, really important to drive the strategy. They are changing the rules on grantor trusts so it won't work going forward. So this is really, really really, really, really important. If you're concerned, please reach out to us, your personal wealth advisor at Camarda, or your lawyers or whoever your other advisors are for non-clients. But this is really important news, and you haven't got much time with the holidays. And believe me, there's a lot of people, thousands of people that are concerned about this. They want to get the trust work done. There are valuation factors. There's asset, titling changes that need to be done, all in time to file a gift tax return for 20. It was Dante that just danced across. Sorry about that. For 2021. So you better get shaken if this is important to you. All right. So thank you so much, Kitses and Company, for that digest. Another thing is I'm going to ask Rick to send out, we've been doing a number of seminars, and I want to put some educational seminars together for clients. Hopefully we can get that done this year. But Kim and I have been doing a new class. We actually have we recorded live footage, which is really, really helpful to talk about what our new investment philosophy is, and give you some, better understanding of how we're managing your money going forward with the many risks that we see in the markets, and also talking about this estate plan strategy and how to use an FBOT to avoid taxes. So I'm going to ask Rick to send that link out with the email with this video. Please watch it. I think you'll find it entertaining and very, very informative. And I'm also very pleased to let you know that my book, The Financial Storm Warning for Investors, is finally out. It's live actually all over the internet. If you just Google financial storm warning, it's amazing, how it dominates the results. But all clients will get a copy of this. We haven't got the paper books yet. I'm not sure when we will. Hopefully in the next couple of weeks. Those of you that want to see it sooner, and again, clients, I promise a free copy to. Here's what we worked out. If you want to do that, go and buy it on Amazon. Rick will send you the link, and then we'd show us that you bought it. We'll reimburse you by buying an Amazon gift card, probably at slightly higher value the way they round it up. I think the book's like $34, something like that. But it's a really thick paperback book. So that's really, really exciting. And a lot of those strategies, by the way, this estate planning and a lot of other things. I wrote that book between Georgetown Law semesters over the holiday break over Christmas last year, and a lot of what I predicted in the book has already come to pass. I think a lot more will soon, and these are not really very happy predictions, and there are very, very clear strategies in the book of what we think you should do in order to protect yourself. We are proactively implementing those as based on our understanding of your fact pattern from the personal wealth advisor level. But it probably would behoove you to read the book sooner rather than later. And again, for clients to whom I promised a free copy, if you want to get it fast on Amazon, we will reimburse you. And I think that's it for my truncated agenda. Now it's time for Dad to take a nap and to take Dante off to the Scout meeting. He made Star Scout, by the way. Well on the road to Eagle, working on Life Scout now. And I guess that's it. I'm starting to babble on. So until next time, thank you so much for watching. You'll probably see this midweek or so. And remember what I said about the estate tax exemption coming down and the need for very, very quick planning if this is something that you're concerned about, and if you care about passing on your wealth to anybody but the government, and you got more than a couple $1 million in net worth. Those of you that have computers to hear me, take heart. Okay, that's it. Have a great week, guys. We'll talk to you soon. Bye-bye.